Good afternoon, you beautiful people. Welcome back to Young Money Investing. It is Sunday afternoon, so it's time for my weekly market prep where I go over the major U.S. stock markets so that you can gain a better grasp and a better understanding of price action, what type of market we're currently in. Are we trending up? Are we trending down? And then hopefully you make better trading decisions and ultimately make more money. Real quick, please go smash that like button. This channel is growing slowly but surely, but I would like to grow it faster and faster. So if you enjoy this content, you enjoy the fact that I put it out every single week, please go smash that like button. Let YouTube know you appreciate it. Share it with a friend so that they can gain some value from it as well. And let's go ahead and jump into the charts. Alrighty, starting off on a daily time frame, looking at the DXY here, you can see, to put it simply, we fell off a cliff going back to Friday the 7th, which I did touch upon last week, and how we just had kind of, very subtly, very slightly broken this upward sloping trend line, kind of a bearish Marubozu candle, and then that trend was continued all this week. Pretty much Monday through Thursday, just gigantic red candles closing. Let's see, the low was pretty much the same as the close, low the same as the close, low the same as the close, low the same as the close. So pretty much bearish Marubozu candles all the way down, all the way throughout the week until Friday, when we did finally get some very small relief. I've been talking about this 101.62 level for a while. We did finally break it, and we broke it in a pretty significant manner. So we have not quite moved down to this 99.19 level. Actually zooming out to a weekly time frame here, so you can see that is this level right over here where we kind of ran into a little bit of resistance. We're actually going to go ahead and redraw that. I don't quite like that. We're going to make it look more like that. It won't make this green because this is currently supporting price action. So it's kind of this green area below us that we have to look forward to. As you can see, we are making our way down here. I would expect maybe some type of slight retracement as we take a look at our Fibonacci here. You can see moving back up to that 101.62 level, that would be a 50% retracement. So if we do get a retest that's a 50% retracement, I think that's a really great place to start looking for a short position on the dollar or a long position on assets measured in dollars. We might get that retracement, we might not, but I think that would be a good level for sure, that 50% retracement. That works out really well for me when I'm trading futures. So I think that could be a good place to see kind of a retracement before a trend continuation down to that 99.95 level. Jumping over into the NASDAQ. NASDAQ was stuck in this consolidation for a little bit, kind of broke out of it, but really not very thorough. You can see that Friday the 14th, really weak candle here. Get the moving averages back out. Really weak candle here. Moved up to a high of 857, but ultimately closed at 694. So not a very strong candle. You can see it's got a nice wick. It closed almost at the low. Really weak candle. This is not even like a mallet candle. This is just a very weak bearish candle. You can see the RSI was kind of peaking out a little bit of RSI divergence acting up here. So are we going to see a retracement on the NASDAQ? I think it's possible. I think it does have to happen sooner or later. And the NASDAQ has been on a complete tear this year. It's up, I don't know, 40-50% year to date. It hasn't really seen any retracements or pullbacks. Let's actually measure this out from the low here from January up to the high here. Yeah, so from the low to the high, the NASDAQ is up 47% year to date. Really no pullbacks, really not much consolidation. Pretty much, a little bit here from February to March. a bit of a slight pullback there, and then pretty much just up, and away. So I think, you know, you got to give a little bit back at some point. A 47% gain in a year for an index is almost unheard of. So I think there has to be some type of retracement. I'm still looking for something back to this 13,843 level. We haven't really completely broken away from it, but you know, we are also 25% away from our 200-day moving average. I think we have to move back closer to that at some point. You know, at some point, everything reverts to the mean, and right now we're a significant way away from the mean. So look for some type of reversion or retracement. I can't tell you when it's going to happen. The markets are irrational. It could happen this week. It could happen in 6 months. I really can't tell you, but I do think it has to happen. So, you know, don't just stick everything, you know, long futures, long options. Have some cash on the side, have some hedge positions put in place, and be smart with your money. Let's jump over to the Russell 2000. Russell had a really solid week. You can see that that inverse relationship there between the dollar and the Russell really playing out here. Strong day Friday the 7th, and Monday, Tuesday, Wednesday, Thursday. All strong green candles, the exact opposite of what the dollar looks like, until Friday, when we kind of had a little bit of give back finally, which I'm okay with. We did get above this 1923 level that has been hounding us for months and months and months. We have been unable to break above this level. Now we have to hold it. I do think we'll see a slight move back down. I do think we're going to retest it. I'm not counting this wick as a retest, so I think it has to come back down here. And then I want to see a bounce, a real strong bounce off. I'd like to see this move back up to at least, you know, 2015 or so, where we saw this previous high. And ultimately, I mean, could we start making our way back up towards, you know, this 2100, 22, 23? I think it's possible, but this 1923 level really has to hold first. We did get that crossover. The 50 did go through the 200-day moving average, so kind of a bullish sentiment there. Hopefully we hold this into next week, see that hold on this 1923 level, that white line, and continue that bullish move higher. Jumping over to the Dow Jones, really not too much on the Dow Jones, kind of gapping around a little bit, again a little bit choppy here. You can see some gaps from about 34,278 to 34,230. Same thing over here from 164 up to about 278. Just kind of a lot of a gapping action happening right now. What is this? This is Wednesday, Thursday, Friday. Really not the strongest right in here. Really not the strongest of closes to see. Kind of some big tall wicks. We are trading currently above that 34,345 level. Trading at about 34,500. But we did get above it. I'd like to see if we hold it. Do we continue this bullish momentum? Do we just kind of fall back below into this kind of consolidation range? I don't know. But some things to be aware of. The Dow Jones is also a little bit extended from its 200-day moving average, currently about 5%. So nowhere near like the NASDAQ, but still a little bit extended visually when you look at it right here. So we might have to wait for this to come up just a little bit and kind of force price action higher. Ultimately, I would like to see this 345 level break and remain broken. I'd like to see it move back up to 35,410, and from there, you know, just kind of reevaluate what exactly I'm thinking. Now, I did not have a trade of the week last week, but I was able to locate one for you guys this week. So, you know, kind of playing off of what's been working so far, which has been large cap tech stocks. We are taking a look at Lyft. The ticker symbol is LYFT. So let me draw some lines here, and I will be right back. Okay, so I've actually drawn out two zones here. We have this larger yellow area that represents a gap from ranging from about $16 to about $11.22. So Lyft is currently trading at 11.30. We also have this red area right here, which kind of overlaps this yellow area a little bit. And that is the resistance area that we are currently struggling with. And I'll actually adjust this gap just a little bit so that they're stacked on top of each other. So this is kind of the resistance area. Had trouble back here in February, was unable to break through it again in May, rejected again in June, and now in July it looks like we are finally breaking through it. The really bullish signal that I want to focus on right here is we closed above and we held the 200-day moving average. So you can see on Tuesday the 11th we got that big strong push through. Continued Wednesday, a red candle, but still held above. Same thing, rejected off of it Thursday, held it on Friday. So this area right here for price action, super duper important. I want to see price action stay above this 200-day moving average. I want to use this as a springboard for the gap fill. So the trade is fairly simple. We are looking to enter at probably about $12, I'd say, above the high on this candle. The high is $11.99, so $12 would be just about perfect. And we are going to play this gap fill to the upside. If it does fall below the 200-day moving average, I will consider this trade invalidated, and I think that's also a good place to put in a stop loss. So as we go ahead and draw out our position here, kind of move this up. We don't really want to see it fall too far below, and I think that this is a really solid trade. You got 3.1 reward to risk ratio, so you are looking to make $3.15 for every dollar that you are looking to risk, and ultimately you are looking to capture about a 33% gain. So really not bad. Super easy setup. I love gap fills. Gap fills are easy setups. They're easy entries and they're easy follow through. I like that they're high probability. If this position becomes viable and I enter a trade, I will of course alert you guys via a short. Hopefully you saw what went down with Coinbase over the weekend because I posted a short. I did actually end up taking 10% profit. Let me pull that up real quick. Coinbase blew up, man. Oh my goodness. This was a great trade. I called it back, I want to say about here. It was right about here. I want to say it was the last week of June that I called it. I have to go back and check my videos, but I did say, look for a trade, look for a setup, and man, it blew up. So I have a very large Coinbase position in my long-term holdings. I did liquidate 10% of my holdings at 100% profit. And then the rest I'm just going to hold on to because I think that in the long term, Coinbase has a lot more upside. I hope you guys were able to profit off of this because I know I certainly was able to profit off of this. Thank you so much for watching. Please go smash that like button. I hope you're all making bucket loads of money in the markets just like me. And I will see you all next time. Peace out, homies.